Well, for more details on the U.S.-China trade agreement, let's bring in Anthony Chan from New York. Anthony is a former chief economist at J.P. Chase. Welcome back to the show.
Thank you, Rochelle.
So as we saw, just days away from the signing, and we've already seen the U.S. Treasury Department announcing that it's dropping its designation of China as a currency manipulator. Just how significant is this move, considering the timing?
I think it's very significant because, as you know, the Chinese were quite disappointed, and some might even say upset, when that labeling took place. And so this really illustrates quite a considerable amount of goodwill on the part of Washington to make sure that not only is there no glitches as they sign this agreement, but that it paves the way for the next stage of negotiations.
So then, to that point, in the lead up to this signing, break down the most important commitments and steps that both sides have made.
I think the most important is essentially the farm piece of it. We know that farmers took a real significant hit during this trade war. And now, over the next couple of years, the expectation is that farm exports from the United States to China are likely to go up anywhere from 60% to as much as doubling from levels at the prior peak of farm exports. So if you look at a rolling period of a 12-month window, farm exports were running as high over the last couple of years as 25 billion, and then of course came down to as low as numbers below 10 billion. So to see those numbers now moving up 60 to as much as doubling from the peak is pretty significant, especially when you consider that last year almost a third of all the farm income was provided by the U.S. government. And of course, if all of a sudden now these restrictions are somewhat eased, farmers will be able to make money on their own. And that's a positive, certainly, for the farm community. And then we're going to see some relaxation in other areas also.
And so then, in terms of the expectations as to what's contained in the Phase 1 deal, what could we be looking at?
I think that the significant things to talk about is that at the beginning, it was not clear that we were going to see some issues or points in there with regard to intellectual property protections and things like that. And they're coming in. They're not going to resolve everything, but at least they're there. And we're going to see some signs that even the enforcement mechanisms that the United States has some issues with, we're going to see some of that in there. Of course, in future trade deals, that's going to probably be strengthened to some extent, but we're going to see the early signs of that. Manufacturers also that have suffered quite a bit will also get some relaxation here with regard to products that they can now not have to worry so much about tariffs.
And we know this has been a welcome de-escalation, but many of the tougher tariffs from the U.S. and retaliatory tariffs from China are still in place. And then the harder aspects of the U.S.-China relationship will likely come out in Phase 2. How will potentially another year of this affect businesses?
Well, I think that right now, as you move into that next phase, and it's not clear yet whether the negotiations will start immediately, as originally we heard from Washington, and now we're hearing that maybe they'll start those negotiations after the November 2020 elections. My suspicion is that this is all discussions and this is all up for negotiation. So my hope and expectation is that those negotiations will start earlier. And guess what? If they start earlier, there is a possibility that we'll see a rollback of those tariffs on both sides for both countries, and that is a real strong positive. So I remain hopeful that we'll get there before the elections, despite the rhetoric that we're hearing right now.
And it certainly did take quite a while to get to this Phase 1 stage. And as you mentioned, Trump suggested holding off signing Phase 2 until after November's U.S. presidential election. Now, depending on whether Trump is re-elected or not, how does that affect the U.S.'s bargaining position?
Well, I think that there is no question that different political candidates that might make it to the White House have different views with regard to how they would strategize or how they would negotiate with China. But I think that once you get that Phase 1 trade deal, it gives that momentum that does suggest that we will have to bargain in good faith, and so will China. So irrespective of who gets elected to the White House, yes, there are going to be some differences. There's no secret that some candidates are a little bit more dovish and some are more hawkish. But I think that once you get that Phase 1 trade deal, doesn't matter who gets elected, we will be in the mode of negotiating with China. And I think China will also be feeling the same way.
All right, thank you so much, Anthony Chan, there, former chief economist at JP Morgan Chase.